Hello everyone, I hope you are doing well and welcome back to my channel. Let me tell you one thing. This is our sixth video of our series Basic of Stock Market. This is going smoothly. I'm not sure whether you are liking it or not. If you're liking it or if you have any suggestion, please do let me know. And we are currently understanding the fundamental analysis, and in this today we are gonna talk about the quantitative analysis, like specifically ratios. We'll start with the ratios, and I'll be talking about the five different ratios, like let's say profitability ratio, liquidity ratio, return ratios, efficiency ratio, and leverage ratio. And let me tell you one thing before going forward. So each and every like specific ratios, I'm gonna give you two example here. If you want to check it how is going to be or something like this, so what you can do, just go back, see our video which I mentioned on about the screener and all those things. This is the screener website, screener.in. Just for the example, I have added my favorite company Radico Khaitan, and you just need to go here where and the edit ratios, and whatever the ratios you want you can add it. As of now I haven't logged in anything, so you can't see the specific setup. In my previous video I forgot to mention, even you can export every financial part in the Excel, and that looks very fabulous. That's very user friendly and handy tool. So let's get back and let's focus on the today's point. So the first one, the profitability ratio, as I mentioned. So the profitability ratio measures a company's ability to generate a profit. It's all about money and the profit, obviously. In that there are two types. I'm just going to explain you the two. There are others as well, and in the next video I will show you 20 different parameters which I look, or the ratios or anything, to screen the stock. Okay, how you should screen the stock, that's very important. So let's talk about the gross profit margin. The gross profit margin ratio reveals the percentage of revenue retained after deducting the cost of goods sold. And the next up is the net profit margin, this one which I mentioned, providing insights into the overall profitability of the company after all the expenses including taxes and interest. Stay tuned for the breakdown of those ratios, practical examples to help understanding the significance. Okay, don't worry about it. Now we are gonna go into the next one, so which is the liquidity ratio. You can see the fancy way of the way it's presented here. What I did, I just went on the Google and whatever the image I found, I have just had stick to it. So let me tell you one thing. Liquidity ratio assess company's ability to meet short-term obligations. Just like in our day-to-day life, sometimes we, even though we have the long-term plans but for the finance or even in general life, so still we have to focus on the long short term. So same liquidity ratio does this kind of things. Our first stop is the current ratio, which I am showing here. No, it's here. All right, so let me tell you one thing. So specifically the current ratio is a key indicator of short-term liquidity. We'll also be exploring the quick ratio, which I have already highlighted here. And the quick ratio focuses, or the morely focusing on the company's ability to meet the immediate liability without lying or relying on the inventory. That's what I mentioned. Like the liquid ratio assess the company's ability to meet the short-term obligations, so or the short-term whatever the liability or whatever things they have. So the quick and the current ratio, they are more towards focusing towards like relying on any other things, how they can mitigate and all those things. Apart from this, there are other things. Let me tell you one thing. So the next one, that is return ratio. Everyone is interested in the return, so let me tell you one thing about it. So the return ratios, you can use multiple, like apart from return on equity and return on asset, you can use any other things. But what is exactly return ratios? Return ratios help investors to evaluate the return on their investments, means how much you're making. Let's say if you invested 100 rupees or 100 pounds, and if you earn 15 rupees or 15 pound next year, means 50% is the return. And if you consistently throughout the 10 years or next 10 years, if you earn the 15 rupees consistently, so your CAGR is this 15%. Even if you don't earn the consistently 15%, whatever your average will be, that will be your return. So the next, we'll start with the return on assets, this one. All right, so examining how efficiently a company uses its assets to generate earning. And the next, we'll dive into the return on equity. The return on equity, providing the insights, it's all about how much shareholders are generating for a specific stock or something like this. And we'll stick around for the detailed analysis of these essential ratios, return ratios, in the future somewhere. So let's go to the next one, the efficiency ratio. The efficiency is very important. The efficiency ratios are very important. Efficiency ratios, gosh, how efficiently a company utilizes its assets and manages its operations. Our first ratio in this category is the inventory turnaround ratio. Inventory turnaround ratio, as I mentioned. So what it does measures the how quickly a company sells its inventory. So in the liquidity, they don't rely on the inventory, but in the efficiency, we do. Okay. Additionally, we'll explore the days sales outstanding, DSO. So you might have heard about it, or even if you might not have heard about it, I'll explain you about it. It's all about shedding light on the company's efficiency in the collecting receivables in specific period. It's very easy, like in next couple of months or the days, whatever left in the financial year, how much specifically days sales outstanding. Let's unreveal the significance of these efficiency ratios together in the future somewhere point. So the next one is the leverage ratio. ah it's everyone's favorite because everyone likes leveraging through different, maybe relations, maybe the banks, maybe the loan, or maybe the housing loan. Everything is a leverage. Okay, it's leverage means technically debt or something that you technically don't owe or something, or and you buy it for it. So leverage ratio highlights a company's debt management and the financial leverages. So this is very important because sometimes it's very helpful to understand the company's bankruptcy point and other areas. First on the list is the debt to equity ratio, this one. So the debt to equity ratio, providing the insights into the company's debt relative to its equity. We'll also discuss the interest coverage ratio, which I have showed it here. So the interest coverage ratio assesses the company's ability to meet the interest payment. All right. So apart from this, if you have any points about any ratios or anything, please do let me know. All right. So the next one, there is no next one. That's it. So what we learn is profitability ratio, liquidity ratio, return ratio, efficiency ratio, and leverage ratio. And I'm promising you now here itself that in next video, I'll try to give you 20 parameters which I look in the specific stock. And obviously this is going to be with my favorite stock called Radico Khaitan. So Radico Khaitan is, I'll say, liquor company. Even if you are not aware, I think it's been almost a year. That time it was trading around 950 plus minus. So that time I asked, or I suggested to buy this stock, and currently it's almost up more than 50%. I haven't calculated exact returns, and I only do suggest the stocks, or I only talk about the stocks which either I have invested or I am aware about this specific. I'm not suggesting you to buy the Radico Khaitan. And there will, apart from this, let me cover up other things. The understanding these ratios is very crucial, and it's key to making the informed decisions as an investor or the business professional. And what left now? Let me tell you one thing. You learned each and everything about the ratios from top view. Next video is the bottom view. And if you found this videos helpful, please subscribe and don't forget to thumbs up. Thank you so much. Have a lovely day. Bye bye.